Hello guys, welcome back to another great episode. This is episode 42 of Building a Logistics Trucking Business from Scratch. Thanks a lot for being a member of this channel. It has been an awesome journey, and it has been also a learning experience for all of us. I hope you are all doing okay and ready for some traveling. These episodes are to teach and show a process one can use to build a business. Along the way, you will see some business expenses and incomes, and also some other interesting stuff. Today, I will be transporting the train undercarriage to Hanover. Don't forget to like and subscribe for more videos like this. Enjoy! Credit cards versus debit cards. What's the difference? Credit cards and debit cards typically look almost identical, with 16-digit card numbers, expiration dates, and magnetic strips and EMV chips. Both can make it easy and convenient to make purchases in stores or online, with one key difference. Debit cards allow you to spend money by drawing on funds you have deposited at the bank. Credit cards allow you to borrow money from the card issuer up to a certain limit in order to purchase items or withdraw cash. You probably have at least one credit card and one debit card in your wallet. The convenience and protection they offer are hard to beat, but they have important differences that could substantially affect your pocketbook. What is a credit card? A credit card is a card issued by a financial institution, typically a bank, and it enables the cardholder to borrow funds from that institution. Cardholders agree to pay the money back with interest, according to the institution's terms. Credit cards are issued in the following variety of categories. Standard cards simply extend a line of credit to their users for making purchases, balance transfers, and/or cash advances, and often have no annual fee. Premium cards offer perks such as concierge services, airport lounge access, special event access, and more, but they usually have higher annual fees. Rewards cards offer cash back, travel points, or other benefits to customers based on how they spend. Balance transfer cards have low introductory interest rates and fees on balance transfers from another credit card. Secured credit cards require an initial cash deposit that is held by the issuer as collateral. Charge cards have no preset spending limit, but often don't allow unpaid balances to carry over from month to month. Credit card users can reap cash, discounts, travel points, and many other perks unavailable to debit card holders by using rewards cards. Rewards can be applied on a flat rate basis or at tiered rates. For example, you might have a card that offers unlimited 2 miles per dollar on purchases, and another that offers 3 miles per dollar for travel spending, 2 miles per dollar for dining, and 1 mile per dollar for everything else. You could then use miles earned to book future travel arrangements. Credit cards can offer certain advantages over debit cards, though they can also have some downsides. Here's a closer look at the pros and cons of spending with credit cards. Build credit history. Credit card use is reflected on your credit report. That includes positive history, such as on-time payments and low credit utilization ratios, as well as negative items such as late payments or delinquencies. Your credit report information is then used to calculate your credit scores. Responsible spenders can raise their scores with a history of expenditures and timely payments, and by keeping their card balances low relative to their card limits. Warranty and purchase protections. Some credit cards may also provide additional warranties or insurance on purchased items that go beyond those the retailer or brand is offering. If an item bought with a credit card becomes defective after the manufacturer's warranty has expired, for example, it is worth checking with the credit card company to see if it will provide coverage. Or you may have purchase and price protection built in to help you replace items that are stolen or lost, or refund price differences when the item you purchased is sold elsewhere for less. Fraud protection. Credit cards offer much greater protection than debit cards in most cases. As long as the customer reports the loss or theft in a timely manner, their maximum liability for purchases made after the card disappeared is $50. The Electronic Fund Transfer Act gives debit card customers the same protection from loss or theft, but only if the customer reports it within 48 hours of discovery. After 48 hours, the card user's liability rises to $500. After 60 days, there is no limit. The Fair Credit Billing Act allows credit card users to dispute unauthorized purchases or purchases of goods that are damaged or lost during shipping. If the item was bought with a debit card, the charge cannot be reversed unless the merchant is willing to do so. What's more, debit card theft victims do not get their refunds until an investigation has been completed. The credit card holder, on the other hand, is not responsible for the disputed charges. The amount is usually deducted immediately and restored only if the dispute is withdrawn or settled in the merchant's favor. Though some credit and debit card providers offer zero liability protection to their customers, the law is much more forgiving for credit card holders. If you need to rent a car, many credit cards provide some sort of waiver for collisions. Even if you want to use a debit card, many car rental agencies require customers to provide credit card information as a backup. The only way out for a customer may be allowing the rental agency to put a hold of perhaps a few $100s on a bank account debit card as a form of surety deposit. The main drawbacks of using credit cards involve debt, credit score impacts, and cost. Spending can lead to debt. When you make purchases with a credit card, you're spending the bank's money, not your own. This money has to be repaid with interest. At the very least, you're required to make the minimum payment due each month. Racking up high balances on multiple cards could make it difficult to keep up with monthly payments and strain your budget. Credit score impacts. Paying your bill on time and keeping balances on credit cards low can help your FICO scores. However, misusing credit cards could hurt your credit history if you get into the habit of paying late, max out one or more of your cards, close down older accounts, or apply for new credit too often. Interest and fees. Because a credit card is essentially a short-term loan, you'll have to pay back what you spend with interest. The interest rate and the fees the credit company charges are used to calculate your annual percentage rate, APR. The higher the card's APR, the more it will cost you to carry a balance from month to month. You should be aware of whether your card charges an annual fee, a foreign transaction fee, a balance transfer fee, a cash advance fee, a late payment fee, or a return payment fee. As a general rule of thumb, the better a credit card's rewards program is and the more benefits it offers, the higher the annual fee will be. That's all I had about credit cards. In our next video, I will be talking about debit cards and some of their advantages and disadvantages. We have finally arrived at our destination. Thanks so much for sticking with me till the end. My client has paid me €5,005 for a job well done. I hope you've had some fun. Until next time, bye.